Hello friends, welcome to Market Analyzers. Today Nifty fell by 68 points and closed at 19,674, whereas Bank Nifty fell by 11 points and closed at 44,612. Now let's move on to Nifty price action. Nifty opened flat today. After opening in first 1 hour, markets fell and then rallied again and then fell again, closed at day's low. There is a big positive news for our economy, but still markets ended on negative side today. We will discuss about that positive news in a bit. Before that, in this week, Nifty fell by 2.6%. It is highest weekly fall in last 7 months. If we compare global markets, even global markets are not positive. US markets are continuously falling from last 5 trading sessions, so the global sentiment is not positive. Rising bond yields, the bond yields now are at record highs. Dollar index is at 105 mark and Goldman Sachs raises crude oil forecast to $100 per barrel mark. But even when our markets were at all-time highs, moving higher side every day, all these data points were present. Then what is impacting our markets, Nifty in particular? I think there are two major reasons. The first reason is FIs selling. In equity, yesterday FIs sold 3,000 crore worth of shares, whereas in previous day they sold 3,100 crore worth of shares. FIs selling is not new. They were selling even when markets were at all-time highs, but their selling quantity, their selling worth was less. Their selling was always matched by DAs buying earlier, which did not impact our markets very much. But recently, FIs selling is very intense and DAs are unable to match their selling. Even in yesterday's video, I told the reason for FIs selling. It is dollar index, not crude oil rally, not bond yields rising. It should be dollar index which is impacting our markets. I have clearly explained in yesterday's video why dollar index rising is negative for emerging equity markets like India. So refer to that video for more information. The next point is selected selling in few heavyweights. We take top 3 heavyweights of Nifty: ICICI Bank, HDFC Bank and Reliance Industries. HDFC Bank has 13.7% weightage, Reliance Industries has 9.56%, whereas ICICI Bank has 7.87%. So if we combine these 3 stocks, their combined weightage in Nifty comes around 31%. Then the rest of the 47 stocks combined in Nifty 50 is just having 69% weightage. So these 3 stocks can definitely influence index movement. In last week, Nifty fell by 2.57%, whereas Bank Nifty fell by 8%, Reliance fell by 4.2%, and ICICI Bank fell by 4.2%. There is no data why Reliance and ICICI Bank are falling, but we all know HDFC Bank fall reasons, which we have discussed on Wednesday's news video. Their net interest margin impact. So these are the 2 major reasons what I personally think is impacting markets: dollar index and selling in heavyweights, particularly HDFC Bank, Reliance Industries and ICICI Bank. What I think might be completely wrong, but as per my understanding, I could not find any other proper logics other than these 2. So now let us talk about charts. 19,600 is the support. Logics are all clearly explained in yesterday's news video. Resistance is 19,820. Now let's talk about option chain range. Option chain range is 19,500 to 20,200. From 8th September, we are carrying this range of 19,500 to 20,200. Friends, if you like the data I have shared with you till now, please subscribe to our channel Markets Analyzers. Like the video. If you have any friends who follow business news and stock markets, please share the video with them. If there are any feedbacks, please do provide in the comment section. Now let us talk about today's big positive news, which is JP Morgan to add Indian bonds to its emerging market bond index from June 2024. Like Nifty 50, Bank Nifty, Sensex, JP Morgan, they are American multinational bank and they have their own indices in which investors worldwide will invest. Now they are looking to add Indian government bonds in those bond index. Due to this addition, government can borrow money to spend from lower interest rates. Due to these additions, nearly $40 billion is likely to inflow into Indian government bonds. The main reason this is a positive update is they are available at lower interest rate than normally our government borrows. It is likely to be $40 billion. It comes around 3.3 lakh rupees. It is a huge amount which our government can spend and which in turn improves our economy. I hope you understood this update clearly. Now let's move on to stocks news. First, let us discuss about Maruti Suzuki. Today it was one of the top gainers in Nifty. Global brokerage firm Morgan Stanley and Citi remained overweight and they expect next 12 months target of 11,963 per share by Morgan Stanley and Citi expects 13,600 per share. The reason they are explaining are market share gain and increasing volumes in sports utility vehicle SUV segment, and the forward valuation of fiscal year 25 is 23 times price to earnings. When we compare this forward PE to 10-year average PE of 25 times price to earning. The stock may be undervalued and it looks attractive. Updated the brokerage firms and raised their targets. Now let's talk about PNB GLITS. The stock was on upper circuit today. The main reason for rally is JP Morgan inclusion of Indian bonds in their emerging bond index, which we discussed earlier. How will this inclusion help PNB GLITS? The core business of PNB GLITS is underwriting government securities, which means they try to determine whether the bond issuer can pay the interest and amount back within a specific time or not. In this case, they try to evaluate Government of India debt securities which are 100% safe. Government of India cannot default on its debt payment. This is their core business. Now, if Indian government bonds are included in foreign bond index like JP Morgan means, it definitely increases their business as underwriters, and they also trade in fixed income securities. Fixed income securities means instruments which will give us fixed rate of return. This inclusion will also increases liquidity of government bonds, which in turn helps PNB GLITS. With this news, not only PNB GLITS rallied and hit upper circuit, even Punjab National Bank also rallied today because Punjab National Bank holds 74% stake in PNB GLITS. Now let's talk about Sebi. Securities and Exchange Board of India approves proposal to provide flexibility in framework for large corporations for financing. Let's talk this in a simple way. If a company earlier wanted to raise 100 crores, it would be considered as large corp according to previous rules. Those large corporations have to raise at least 25% of borrowing from corporate debt. Corporate debt means the company have to issue bonds to raise money. To understand in a even simpler way, if you want to raise 100 crores, then you are considered large corporation and need to raise minimum 25% through issuance of bonds. If you fail to do any of this, then you should pay penalty of 0.2% of the shortfall in the funds raised through corporate bonds. Now, due to rising bond yields, corporate bond yields are always higher interest rate because they carry risk of default, whereas government bonds are safer due to higher interest rate environment, which pushes companies to raise funds at higher interest rates. So now Sebi has relaxed these guidelines and they have increased large corporation limit from 100 crore to 500 crore, and they also removed penalty of 0.2% if failed to raise through corporate bonds. So this helps companies to raise from wherever they want. And also there was certain rules mandated by Sebi regarding investment advisors, and Sebi earlier gave deadline till September 30 this year to comply with the rules, and this deadline has been extended till September 30, 2025. Now let's talk about Glenmark Pharmaceuticals. The shares of the company fell by 3.3% today, and the news of selling 75% stake in their subsidiary Glenmark Life Sciences at rupees 650 per share to Nirma Limited. Through this deal, Glenmark Pharma will receive 5,615 crore, which they will use to repay debts, said the company chairman. And the reason to sell was to focus on Glenmark core business. Now let's talk about Wipro. It was one of the biggest losers today and fell by 2.4%. The main reason for the fall is the resignation of CFO Jatin Dalal. In his place, Aparna Iyer has been appointed with immediate effect. She has 20 years experience in Wipro. She is a chartered accountant and gold medalist in 2002 batch. Now she will be the chief financial officer of Wipro. Now let's talk about HCL Technologies. They have won orders from ANZ. It is the fourth largest bank in Australia. The order is to transform ANZ's digital employee experience app in users' devices like mobile phones. Now let's talk about monthly economic review document released by Finance Ministry and end today's video with this. They say monsoon deficit of August is particularly plugged in September, which means lower rains in August has been covered in September. Talking about stock markets fall, the report said due to global markets correction, the risk of our market correction is always present, but profitability of our corporations, private companies, capital allocation, banks giving loans and construction activity, all these points are bright spots and doing very good. Next point is the food items, which increased inflation above 7% are now get reduced, which will decrease inflation. Negative updates from the report was geopolitical uncertainty and the risk of stock markets correction and crude oil price rally are major concerns in the second half of this financial year, which may impact the investor sentiment, the report updated. So with this done, this is today's video. Thank you for watching the video.